payroll and how it is very important, especially when you decide to open up your own business. You need to understand that payroll is going to be one of the major expenses that you must be responsible for if you plan on having employees. Okay, so what is payroll? Payroll is going to be where you are going to be making a list of ways to compensate. You have to calculate taxes as well as think about what kind of benefits and deductions that employees can take from their paycheck. Okay? Now, again, what's compensations? What are the taxes, benefits, and deductions? We'll talk into all the details about that, but that is a responsibility that is going to be for both the employer to be responsible to do when we have employees. Okay? So let's go ahead and talk about the difference between a Social Security and a employee identification number. Okay? Now, by law, okay, when you have employees, they must provide a legitimate Social Security number or a temporary work Social Security number if they are not a U.S. citizen. So on their green card, they should have a little section where they give you a temporary Social Security number so they can work in the U.S. while they're still here. And that is usually administered by the Social Security Administration. Now, of course, when we understand what a Social Security number does is it does identify us as an individual, right? It's going to be in a total of 9 digits, where it goes 3, 2, and then 4. Okay? Now, again, this is a way that the government can identify us, but it's also a way to be able to collect Social Security, but also a way to also collect taxes for each individual. Okay? And of course, an employee identification number is usually issued by the IRS. And what an employer identification number does is it provides a identity, or it provides a means for us to identify a business. Okay, and in this case, when the IRS issues it, it's similar to a Social Security, right? However, the way that the digits are formatted, it's going to be the same 9 digits, except it's going to be 2 and then 7 digits followed behind it. And because this one's different, because it's administered by the IRS, it's a means to identify and also keep track of taxes for either a sole proprietor, partnership, corporation, and etc. All business organizations must have an employer identification number. Now, if you and the sole proprietor, if you are the sole proprietor, you can get away with providing your Social Security because you and the business is one, right? Most independent contractors, right? They identify themselves as their own self-employed type of business, and when they do identify that, they must use their Social Security and claim it on their 1099 form. But in this case, right, when we think about having the business and economic entity principle, it be must best to be keeping your taxes from your personal and your business separate. So they do encourage you as a sole proprietor to apply for a employer identification number. So that's the difference between a Social Security number and an employer identification number. Okay. Now, how do you apply for an employer identification number? You must go to irs.gov and you're going to be looking at Form SS4 form, which basically applies for a employer identification number. Now, usually when you do apply for your business license, you also apply for this at the same time, okay? Because you need to be a legitimate business first in order to have a actual identification number, okay? So that's why when when you do sign up for a business license, right, to be established as a real business, that's where you can go ahead and also sign up for an employee identification number once you get approved. Okay, and they process both of the paperwork together. Yes. Question? No? No question?
Teacher,
Yes.
good morning. You have orange square in your presentation picture. Make this yes.
Okay, so going back to our PowerPoint here, we're talking about how do you apply for an employer identification number. It is going to be, again, issued. You have to go to irs.gov, and you're going to be using the form SS4 form to sign up for an employee identification number. You must have your business license first before applying for an employer identification number. You need to be an existing company. So that's why you need to have a business license first to establish whether you got approved as a type of business. Once you get that, then you're going to go ahead and do your EIN. But in this case, when you do apply for your business license, you fill this out at the same time. So once you do get approved, it automatically assigns you a number. Okay. So again, this is for reasons for having an employer identification number. Holds many reasons, especially because it identifies you as a individual company, right? But it also allows you to collect taxes in a much more easier and organized way if you have an employer identification number. Okay? So let's go ahead and talk about employees. Okay? What are the different types of employees? Now, in this case, I will talk about all six different types of employees. However, there are beyond these types of employees. If you go to irs.gov/publication 15, you're going to be you're going to see that there's more than just these regular six different types of employees, right? There's family oriented type of business, where if you have family members that work in the same company, what are the rules against that? There's ones for agricultural employees. So there's a lot more that goes beyond this list, but these are just the more the common ones that you do normally see in a typical business. Now, the one that we want to focus most on is going to be our statutory employees and our regular common law employees. Those two types of employees are going to be the only ones that actually exist on your actual payroll. Everybody else, whether it is a statutory non-employee, independent contractor, leased workers, or even temporary agencies, all of those are going to be considered independent contractors, or they're going to be considered they're not employees, so they're going to be just mere expenses to the company. And these ones are all going to be using the 1099 form. Okay. So let's go ahead and talk about the different types of employees that exist in the world. Okay, so we're going to start out with the very first one. It's going to be the common law. What can they do? What are they? Okay, so common law workers are also known as your regular workers, right? The unique thing about them is that you can tell them what to do, how to do the job, when to do the job, and how the task is being done. Okay, so that means when you are a common law employee, you as an employer have 100% control of what they do. Okay, you assign them a task and you tell them how to complete it. You give them all the materials to tell them how to complete it, and so on and so forth. And you tell them when to come in and when it should be done. Okay, so this is what I mean by full control of what the employee does. Okay, and again, it's also so then here, right, if you can tell them what, who, what, where, when, and why, what to do, right, that pretty much gives you a straightforward that that these type of employees, right, are the regular workers, right. They could be a specific staff person that's required to come in from Mondays through Friday from 8 a.m. to 5 p.m., right? And their job is to just get whatever the task is given to them, and they're provided all the materials to get the job done. So again, the way that we determine common law employees is how much control we have over them of what they can do for the company. Okay? Now, a statutory employee are slightly similar. The only difference is that you can tell them what to do. However, the only difference is that these kind of workers, their time frames are not always going to be consistent. Okay, but the idea here is that they still are given a task. They are still given supplies to get the task done. They are told when to come in. However, the difference here is that when we understand statutory employees, we have to understand that whatever job that they are required to do requires them to clock in at different hours of the day. Okay, so a typical example would be a truck driver, right? They are given a task, they're provided the truck, however, they're told to come in on specific days, on specific times. However, whenever they do the task and however they complete it is going to be what the end result is going to be. The task is still done, but the time frame is going to be what's going to be the most different, because you don't need a truck driver to drive in every single day, right? Unless you're a specific type of company. So in this case, their task or their time or their job description is a lot more limited than for a common law, where you will require them to come in specific days, specific hours, and you require them to come in a consistent, frequent schedule. Where, example for a truck driver, right? You only need them every so often. And that's the difference here, is you're still given the task of what, you still control them. However, the only thing that you cannot control is having the completion of the task. Okay? And when it is completed, right? So then let's talk about what we do when we have these type of employees. The difference here is that when we have common law employees, we are 100% responsible to pay into their taxes, okay, from all earned income, and we also are responsible to pay into their FICA, which is the Federal Insurance Contribution Act, right? Social Security and Medicare. We are responsible to have to pay into it for a common law employee. However, for statutory employees, even though they are on our payroll, we are not going to be taking anything out of their federal income. So that whatever whatever earnings that they earned, right, they get to take it all 100%. However, so you're not going to be taxing them on their income that they earned. However, you are responsible to pay into their FICA, their Social Security and Medicare, because at the end of the day, they still work for you. They still are part of the company. It's just the only difference is they're not a regular worker that has to be scheduled to come in a specific day, specific time, in a regular schedule. In this case, it's more of a flexible schedule. Okay. So, any questions here?
No.
Yes. What's that? Yeah, what? Yes. Okay. So then let's go ahead and talk about the other different types of employees. Now, let's kind of understand this. These are more of workers, not technically employees, but they all fall under the list of the types of workers or the type of employees that you can have work for a company, right? And the third one is going to be a statutory non-employee. Okay, so a statutory non-employee is going to be those individuals who basically they are their own individual person. However, the difference is that they are able to create their own their own results. They are able to do whatever they want to do. They can come in whenever they'd like. So in this case, statutory non-employees are given a task, but they have more control of how, when, and basically the ability to complete the task. Now again, these type of workers are going to be more for agricultural workers, but these are also for direct salesmen, right? You provide all the products to them and tell them, hey, your job is to sell the product for me, for this company. So they go do their own time whenever they want to go clock in and go do their travels and so on and so forth. Same thing with real estate, right? Real estate, it's a big, huge organization or agency, but every individual that works there is going to be based off of whenever they come in, they take the cut, etc., etc. Okay, so more common ones you'll see is that these are more likely to be more commission based type of individuals who work for the company, but their job is to just get the task done. But however they do it, when they do it, and how they do it in general is going to be up to them. Okay, and they are liable for their own income taxes. So they're the ones that have to also fill out the 1099 form as a statutory non-employee. Okay. Now, statutory non-employees are very, very similar to independent contractors, except independent contractors, you're not given, the company doesn't supply you with anything. You supply your own stuff. So in this case, you, as an independent contractor, are someone that provides a service that does the job, and how they do it, when they do it, provide their own supplies is going to be the key factor of what an independent contractor is. Okay, they make up the rules. All you're doing is you're just contracting them as a person that works for your company, but they get the task, they get the job done, however they want to do it, whenever they want to do it. And they supply their own materials to be able to complete their own task. So in this case, right, they are 100% responsible to pay for their own taxes as well. So they are 100% going to be a 1099 worker. Okay, so again, on the 1099 form, you have options to choose on what kind of employee you are. So you have the option to choose as an independent contractor, self-employed, etc., etc., etc. Okay. Now in this case, I'm not going to go over the 1099 form because even though it is widely used, because it is much more easier, because again, when we talk about having these type of employees, they are just mere expenses to the company. They take the profits 100%, but at the end of the year, the individual, are responsible to pay for their own taxes. So you don't have to pay into anything. You're not responsible to for their health, for their care, for anything, because they are responsible to have to do that on their own. Okay. All right. And then we have temporary work agencies. So these are contracted individuals again as well. So this is more common that you do see here in Vegas, where you have headhunters, where major corporations or lots of other businesses pay the big bucks to these temporary work agencies to look for or scout for employees to work for you for a temporary job. Okay? Now, again, as the employer, you're just paying the company a small check, and then that check is going to, whatever that company is doing, they are the ones that are going to be contractually making an agreement with you on whatever your pay is. So you don't even pay the employee directly. You pay the company who got that employee for you. Okay, and again, you don't pay the workers, you pay the company, and they are just a mere expense for the company. Okay. Now, and then of course, here's another one that kind of stems out from a temporary work agency. Is going to be called a leased worker. Now, a leased worker could be a employee that came from a temporary work agency, but the difference here is that the employer has a possibility to buy out the contract under the temporary agency and have them work as a leased employee. Okay? Meaning, prove to me that you can work this contract, and if you can do it, then I will buy that contract out, and then you become an actual employee. So that's a huge difference here. So so that's a huge difference there. So once again, you don't pay the worker itself, you just pay them to lease them. Okay, but when you do buy out that contract, then you can go ahead and determine whether you want to make them your employee or you want to make them an independent contractor. That's just how lease workers work. They are one of the most flexible ones, where it's a possibility you can become an employee or you can become an independent contractor, or your contract's just being bought out by someone else. Okay. Any questions in regards to all the types of employees that we took a look at? Okay. So the reason why I'm talking about these is so that you know the difference, because in this case, right, when we look at the corporate world, we have all these different types of employees that do exist. However, the one that we are mostly focusing on is which individuals belong on the payroll itself, the payroll list that the company is responsible to pay into their benefits, and et cetera, et cetera. Like I've mentioned before, the only two people that are going to be on the payroll is going to be your common law and your statutory employees. Everybody else is a mere expense to the company, and they're not responsible to pay for anything, and the individuals themselves must pay for taxes for themselves at the end of the given year. Okay? And they must fill out a 1099. Okay? So let's go ahead and talk about the payroll process. What are the steps to doing payroll? Okay, so there are two major sections when we deal with our payroll. Okay, we have to deal with our employees standpoint, and then we have to deal with our employer standpoint. And this is why having employees is going to be one of the major expenses to a business, because depending on what benefits or what deductions or even what taxes you have to provide, including their FICA, there is a lot of liability and responsibilities for having an employee, and they cost a lot. Especially when you rack up how much money each person is going to be collecting. Okay, so let's focus on the first section, which is going to be the employee section, where we are going to be dealing with figuring out their compensation, so how to pay them. We're going to be collecting their W-4 form to let us know how much we need to deduct from their paycheck. We need to also figure out and determine how we pay them, how frequently we pay them, when we pay them, okay? And then we're going to also have to figure out what taxes are we responsible for the employee that has to pay into their own taxes, okay? And then once we do that, then we'll take a look at the second half, which is dealing with the employer's perspective, okay? So let's take a look at the first one. So step one is we need to submit to the employer's department to recognize that the business has employees, because we are legally responsible to take care of them, right? We must legally be responsible and make those payments known. So again, anybody that's paid under the table obviously is illegal. So this is the legal action that you must do in order to actually start paying for your employees. Now, what are the processes that go through this? You're going to be submitting a W-2 form. Now, this is different. When you are the employer, you must submit a W-2 form to the state employer department office, whatever it is. In the state of Nevada, it is known as DETR, right? The Department of Employment, Training, and Resources, right? You may have heard of it. DETR, DETR for short, okay? They are a employment center. Okay, they are responsible to record every single businesses, whether they have employees or not, or whether they're looking for employees, and etc. Okay. Now, of course, when you identify that you do have your employees, you must fill out a W-2 form for every individual employee, and it's going to list out information such as their social security, what is the task that this employee is responsible for, what kind of employee are they a common law or are they statutory, again, and you're going to also determine how much you pay them, and etc. So this is basically letting the department know that you have employees and what you are responsible to pay for them, and they are the ones that are going to be keeping track of the records in regards to the employment status, okay? And what every business has and how many employees each company has. So okay, so again, you are obligated to do this. Now, depending on what kind of business you are, if you are a corporation, you must also file this to the IRS, just because again, you're dealing with a larger scale when it comes to corporations, because there's lots of rules and regulations for corporations that they must fall under when they do payroll too. Okay. So then step 2 is going to be collecting W-4 forms from your employees. Now this is required for all new employees to fill out. Now, most cases, your employer should be providing this W-4 form. They can either have the choice to either fill it out for you, or you go talk to them and they fill it out as you talk to them, or you do have the chance where you have to provide this form, or filled out, of course. They provide the form for you, but you have to go and fill it out. Now, what does this W-4 form do? This W-4 form tells the employer what they can and cannot take away from from the employee's paycheck. So any deductions, any claims to prevent basically for an individual to not get taxed as much. And that's what a W-4 form does. Now, for any reason that an employee fails to submit one, it is automatically assumed that you're going to get 0 deductions, and you're going to take the highest tax bracket rate percentage, and et cetera, okay? Now, again, there are some rules and regulations on the new W-4 form, because it is slightly different from your previous ones that you have signed from 2019 and prior. Okay, this time, because of the new generation, the new society, right? It is very possible to have more than one job. So what the IRS is doing here is it's requiring to let employers know that they how much total income this individual is earning. Okay, so it's going to have a whole section where you have to fill out all the jobs that you are currently having, right? Because especially when you can have a primary job but also do Uber or Lyft, right? That's going to be considered a secondary income, and so on and so forth, right? That's just today's society, that it's much more acceptable to have multiple jobs and multiple income, okay? And especially it takes also into consideration whether you have money in stocks as well. So this one is actually going to be one of the more complicated forms to fill out, just because there's just so much the regular one that you used to fill out in 2019. So in this case, here's the 2021 form. Right now, obviously, we are reaching the end of 2021, so there's going to be a new form, right? 2022 coming out soon. It should be the same, if not yet similar. So again, you fill out your information, you fill out your social security number, and your address, and etc. First thing you got to do is you got to establish what kind of individual you are. Are you married? Are you single? Are you the head of household? Or yes, so those are the 3 options, right? Where prior to this, you could select those options and use it as a withholding. In this case, no, there are no withholdings in this. You have to establish some kind of status, okay? And of course, each section that you fill out is going to pretty much walk you through. So section 2 is to list out your other jobs and other means of income, right? If you are married, your spouse's income, okay, and you file together, your spouse's income is going to be included as part of income that is for your entire household. So if you decide that you are married but you're filing separately, then you don't need to fill a section. But if you are taking advantage of that tax break, right, as a married individual, you do need to consider how much income that your spouse is earning. This is also going to be for any secondary or tertiary jobs, right? what other income are you also earning? Okay. Then the third one is going to be if you're going to be claiming any dependents. Now, back then, any dependent could be in regards to a withholding. In this case, no. They decide that dependents now are going to be considered $2,000 per individual. Okay? If they are a child of yours under the age of 17, it's $2,000 per year. Okay? And if they are just a dependent that isn't your family member or older than 18, then you could still claim them, but they're only $500 a year. Okay, so again, that's very low. I don't know any child that is worth $2,000 a year, but this is where your tax break is, right? They let you keep $2,000 as a tax break for you to claim that money for every paycheck that you want to that you do earn. And of course, last but not least, any extra deductions or any other extra income. So if you have stocks, that's where you're going to be putting that number in here. Any other deductions. So if you have a house that you want to take a tax credit off of or deduct it from your paycheck, then yes, you can also apply that there. Okay. So again, way different than what it used to be, right? What it used to be is you could just claim up as many number of withholdings, and then you just tally them up and then go from there. In this case, everything is going to be based on an annual amount of income, and it's going to consider a lot of different factors. Okay, so what they're trying to do here is they're trying to make it much more easier. Instead of, if you do have a secondary or a tertiary job, they do, instead of filing different W-4 forms for every single employer, right? You just fill out one, and it's going to be the same throughout every single employer that you sign up, that you sign a W-4 form to. Okay. So that's what's different here. Now, if this is something new to you, because you're so used to doing the 2019 W-4 form, again, you can apply this. As I said, it's not only for new employees. You can, for any reason that you have any life-changing events that happen. Let's say you do get married and you decide, I want to file jointly. You can issue a new W-4 form anytime to your employer at any given time. You're not strictly only required to just do it when you do apply for a new job. No, you can change it at any given time. However, if you are confused on how to fill this out, there is an option for you to go onto a website to be able to fill this out for you, and it's called it's like called the tax estimator, and it's on the irs.gov page where you go. When you click under W-4 form, they have a section there that allows you to be able to help you fill this out. And it lets you also adjust your taxes accordingly, so you can either maximize your tax credits, or you can either minimize them, minimize the amount of tax that you can pay. So once again, if this is the website that you want to actually make sure you take a look at for anything that has to do with taxes, employees, and so on and so forth. So if you do come here, the first thing that you'll see here on the website is just all these things, right? Your main point that you want to go to is going to be forms, and that's where you'll find all your information in regards to what you need. So forms and information. So if you click on this, it will give you the forms that you need for the W-4, and it gives you all the other different forms too, whether depending on what kind of employee that you are, or whatever other statuses that you are in regards to just paying taxes. They have all of it here. So a W-9 form here, the 1040, the etc., etc. So they have everything here, the W-2, the 941. So all the tax forms that you need to know here. And they have, yes, okay. So here you go. They give you the W-2 here. This is for employers, okay, because the employers are the one that provides employees the W-2 form at the end of the year. So again, make sure you know this, okay? W-4 is for employees. W-2 is for employers, okay? And so on and so forth. So again, if you want more information, I would do recommend you to check out irs.gov. Again, I am not a tax accountant, so but as a individual who is teaching you guys payroll, right? This is I'm telling you what you can and can't do. But in regards to federal taxes, what are the mandates and what you have to do is not in my field. Okay? So let's go ahead and talk about the employee taxes. Talking about federal income tax withholdings. Okay? So this is on the employee's paycheck, okay? This is what the employee is responsible to pay into when they do work for the company, okay? And it's going to be based on two things, right? It's going to be based on how the individual is being paid, and second thing is going to be based on the W-4 form that they submit, right? What withholdings are they exempt from? Okay, what deductions can they take off of their paycheck so they do not have to pay all the taxes to the federal? Right? All right. Now, in this case, right, we all know, right, the higher the wages, the higher the tax. Straightforward. Okay. Now, of course, every year the IRS releases a new bracket / tax table, as we know. So right now, they are still in the works of discussing what the new tax laws are for the government, right? As we all know. So then they can, once they issue that, it's going to start be effective as of January 2022. Okay, so I believe I think it's released already, and it's going to be figuring out what the income tax brackets that you belong into, especially when you are being calculated for the tax on the income that you earn. Now, of course, there are two different methods that you are going to be learning, or I'm sorry, there are two methods that exist when we calculate the taxes for federal income tax withholdings, okay? You have the bracket method, or you have the percentage method. Bracket method is the most straightforward thing that you can do. You're going to take whatever form, W-4 form, okay? You're going to take how much you earned, and you're going to look up in a list of numbers, and you're going to follow through, and you're going to find which bracket you belong into, and then boom, you find out what your taxes are. I'm not going to show you that one just because that one is too easy. So I'm going to show you a little more complicated one when it's more commonly used, which is the percentage method, because it is a lot more accurate than the bracket method. The bracket method is based on like a rounded number. So in this case, I want to show you the percentage method, which is a little more accurate. Okay, and what it involves in is going to be the amount of earnings, the payroll period, as well as the filing status. Okay. So again, what we're doing here in this class is showing you how to manually calculate payroll. Okay. Now, how do we do that? We're going to start off by looking at the percentage method using the circular E table. What is a circular E table? It is your tax tables. Okay, so I've mentioned you to before, right? If you go to irs.gov, I've also uploaded for you guys the tax tables for you. It's called, gives you your tax bracket tables. So again, if you actually go through this, what you're going to notice is that it is separated based on a couple criterias, okay? So the first table that you'll see is for when you're doing a automated type of service, where it is an automated payroll calculated service. So in this case, so when we talk about automated, we're talking about things like QuickBooks, Peachtree, those types of accounting programs. Those are going to be meant to be using a separate table. Okay, so that would be the very first one right here, percentage method for automated payroll services systems. Okay, so again, each one gives you a list of how to calculate it, whether you do it manually or whether you use some kind of payroll system to calculate for you. Now in this case, right, I've also mentioned to you what the bracket method looks like, right? If you look at this, is what I mean. All you have to do is follow these steps right here, look up your list, right? And then you'd be able to find your amount right then and there. This is too easy. So the one that you're going to be focusing on is going to be called the percentage method for W-4 forms that are 2020 and later, okay? Because right now we're in 2022 almost, right? So in this case, we can't be using 2019 and prior W-4 forms because those won't exist anymore, okay? And when those don't exist anymore, there's no purpose to have to practice that. Now, for those individuals who were previous employees that nothing has happened to them, who submitted a W-4 form from way back when, yes, you do have a table where you are able to actually take a look at that. I don't know what I did. I think I was looking at this one, right? Okay, so I think I was going through the pages to find the exact bracket method or the exact percentage method that you're going to be using for this class. So I think I was scrolling all the way down in this one. So yeah, sorry, it takes a long time to get through all. So this one right here, this is the table that you're going to be using, is going to be the percentage method for manual payroll using the form W-4 form from 2020 and later. Okay, so this is the one that we're going to be practicing here. Now, I posted these tax tables just so then you have all of them for any different situations that you have when you are the employer standpoint. Now, of course, this one, right, if you have individuals that are in your business that are prior that have the W-4 form for 2019 and prior, it's definitely much more easier than this one. Now, I provided you the tables, so that means everything that you go on for, I will provide you the table. You do not need to have this worksheet up at any given time, okay? I just wanted to show you what are the different tax tables for 2021, okay? So this is the 2021 tax tables for this year, okay? And we're going to be using the percentage method once again for the W-4 form, that's 2020 and later. Okay. So now that we're going to go continue back on roll. Now let's go ahead and talk about what are the steps to actually process the employee's part of the federal income tax withholdings. Okay. So we're going to start off with number one, which is going to be determining how much the individual has earned. All right. we're also going to calculate how much other income that is contributed to there. So we'll add it and we'll subtract any deductions that the individual has claimed on their W-4 form. Okay? Once we've done that, then we're going to determine what their tentative amount of withholding is, and this is where we're going to refer to the circular E table to discover which section in the tax tables that they belong into and what the calculations is going to be there for. Okay? So let's go ahead and dive into the first one. So in this case, we have an example here where L is a single woman with one dependent, okay? And she only has one primary job, okay? And of course, she earns $15.25 an hour and works a total of 45 hours, okay? And she also claims her dependent, and there's no other additional deductions, okay, or withholdings that she claimed. So in this case, let's go ahead and figure out her payment frequency is going to be weekly, okay? And third thing that we have here is going to be figuring out what is her total earned wages. So in this case, right, what is our total gross earnings? We're going to take our $15.25 and multiply it by the 45 to get a total of $686.25. Now again, step 2 says you're going to add any extra income that you've earned, whether it's from your spouse or whether it's from a secondary or tertiary job. In this case, she only has one primary job and she's filing as a single woman. So therefore, number 2, there's nothing you need to add, and she didn't claim any other extra deductions. So therefore, steps 2 and steps 3 are both 0. So that means her total tentative withholding amount that is subject to be taxable is going to be for the $686.25. Okay? So because we have this, now we need to move to step 3, where we're going to go ahead and refer to the circular E table. Okay? So in this case, we're going to be using this table right here. Okay? Because we need to have, there's certain tables that are for certain individuals. So in this case, right, it's based on the payment period. So we said that she's get paid every single week. So therefore, she's under the weekly table. Now again, this weekly table is now broken into 2 sections. You either file as single or married filing separately, or you go as married, or in this case, this is married filing separately, but there's 2 different tables, right? One is whether you claim number 2 or you do not claim number 2. So again, if you have extra income, then you're going to be adding more money. But in this case, since she claimed number 2 as no extra income because she only has one primary job, so therefore, we're going to be on the left side, okay? And we're going to see it. So the amount that she's subject to be taxed at is $686. So how this table works is we're going to take a look at A, B, C, D, and E, okay? A is going to be determined how much did she at least earn, okay? And then, of course, B says how much did she but not over, okay? So earned but not over. So in this case, if she earned a total of $686, that's definitely more than 0. That's definitely more than 241. That's definitely more than 433. But it's definitely not more than 1,021. Okay? So therefore, she belongs in this bracket. She falls in between 433, but does not earn over 1021. Okay? So if we follow this line through, letter C says that by the government is going to take this amount from her paycheck regardless of what amount that she earns. So that means $19.20 is automatically taken out. Okay? And then Section D says the amount over is going to be subjected to 12%. And then the amount that the government lets you keep, which is Section E, is going to be $433. Now, how we calculate this is going to be working backwards. I don't know why they put this table this way, but it works backwards, okay? Once you locate your which section you belong in, this is how the calculation is going to be. You're going to take the amount that she earned. You're going to subtract letter E, multiply D, and then add C. So what does that mean? Let's go ahead and do the example here. So when we take a look at this, that section there, right? She earns a total $686.25. However, the government lets you keep $433 non-taxable. So in this case, we're going to calculate that to get a total of $253.25 extra. So this is what she's made in excess, okay? And that means this amount is going to be subject for an additional tax at the 12%. So that means we're going to take the 253 in excess, multiply it by the percentage. In this case, it was 12% to give you a total of $30.39. Then we're going to add letter C, which is what is the government going to take from you regardless of what amount that you owe or that you earned, which was the $19.20. So when we add those two numbers together, we get a total of federal income tax withholdings of $49.59. Okay? That's what she's going to be subject to be taxed at. Okay? And then, of course, this is where step 4 and step 5 is going to be, you have to pay a lot of attention to. In step 4, right, this is where we get to take out whatever amount that she claims her dependents as, okay? This is very weird because back then in 2019, you would actually normally take your dependents out before taxes, okay? You would never take them after taxes. But in this case, now in the new 2020 and 2021, you take them after you get taxed. Okay? So in this case, right, how much am I going to take out away and claim if she claimed one dependent, right? In this case, we're going to take a look at her W-4 form. In this case, right, she said that she claimed one dependent, right, and it's a child. So in this case, she gets to claim $2,000, okay? Now, in this case, right, when we do this, it does say that when you're going to take the $2,000, because this is an annual amount, you're going to divide it by the number of payments that you get in grand total in a year. So in this case, right, we're going to be taking a look at table 5, which tells us, right, if she's on a weekly pay period, she's going to be claiming 52 paychecks. So therefore, 2,000 divided by 52 is going to be $38.46. So in this case, what this amount is going to do is it's going to subtract out from your total taxable amount because, again, this is what you get to claim. Okay? So in this case, right, 49.59 minus 38.46 is going to give you a total of $11.13. Okay? Last but not least, step 5 is going to be any other additional extra deductions or withholdings, which in this case she claimed nothing. So therefore, at the end of her paycheck, she's only going to contribute $11.13 to her federal income tax withholding. Okay. All right, any questions here? Okay. So again, this is one of the most confusing things because now that we're dealing with all these different factors, right, and the rules have changed, right? You're taking tax out a lot more differently than you would have done in the past. But this is how you calculate it using the percentage method. Okay. So, of course, under the percentage method, right, if the fifth one is going to be any extra deductions, then the total amount that she's going to be subject to pay into her federal income tax withholdings is $11.13. Okay. So then what other employee taxes is the employee responsible to pay out of their paycheck? Every employee must contribute to their Federal Income Contribution Act, okay? Also known as FICA. Not FICO. We're not looking at the FICO score. We're looking at FICA, okay? So in this case, we're looking at Social Security and Medicare, which is your Federal Insurance Contribution Act, okay? They have different names, right? Another word for Social Security is going to be your old age and disability survival insurance, okay? So that one is the OASDI, okay? And of course, your Medicare is going to be your HI, which is your hospital insurance, okay? Those are just interchangeable words, but they technically mean, right, they're well known as Social Security and Medicare, okay? Now, in this case, in the publication 15, they tell you that the Federal Insurance Contribution Act is a set percentage based on the total amount of earning. So in this case, Social Security is subject to 6.2% of the individual's paycheck. Okay? And of course, so if L earns a total of $686.25, we're going to multiply that. Okay, so we're taking gross wages, not taxed or net wages, right? Or in this case, not yet. So we're looking at what she completely earned for that payroll period. And we're going to take that and multiply it by the 6.2% to get a total of $42.55. Now, here's something that you need to know. Social Security, there is a cap amount that you can put into in your Social Security, and that is a total of $142,800. Okay. Now, most likely for common employees that earn very little, right? This amount you will never reach after the age of 70. I think the new age for Social Security is 65 now, or 66 or 67, something like that. So in this case, right, even if you start to work at 20 and you work a job that only pays like less than $20 an hour, you will never meet this amount ever, okay? But of course, if you have a high-paying job, this max amount of $142,800 is very reachable. Now, this is the assumption that with the Social Security, you the life expectancy, right, after you retire at age 67, I believe, you're not supposed to live that much longer. So they think that $142,800 should be sufficient for you to, be able to pay for everything in life. Okay, so that is the Social Security. However, the Medicare, right, is going to be subject to 1.45% of your gross income. Okay? So in this case, there is no cap limit. So you can put in as much money as you'd like into your Medicare. It's very low, but again, this basically helps with a lot of the medicines that the individual must take, right? Any bills, any regular doctor checkups, right? Those kind of bills, 1.45% should be able to cover them, and you could put in as much as you'd like. All right. So in this case, if L earns a total of $686.25, therefore, you multiply by the 1.45% to get a total of $9.95. So that's how you calculate your federal insurance contribution act. Okay. Any questions here?
No.
So let's go ahead and talk about how we actually journalize it. So in this case, right, because this is going to be considered an expense that you must pay for the company, right? It's your responsibility to pay your employees. So you're going to have an account called salaries and wages expense, right, for that current accounting period. Other things that you're going to have is, as a employer, you are responsible to withhold these amounts from the employee's paycheck. And because you are going to be responsible to withhold from the employee's paycheck, therefore, the employer is responsible to pay to the federal government for the employee. So therefore, we're going to create a bunch of liability accounts to basically, when we withhold the person's paycheck, right, our responsibility is that we're going to pay for the employee by holding that amount from their paycheck, okay? And we're going to be responsible to make those payments for the employee. So instead of the employee goes to the IRS themselves, right? That's what the responsibility of the company is they're going to make the payment for them. So salaries and wages expense is going to be your total amount that the person has earned, okay? The federal income tax withholdings, which we calculated to be $11.13, right? We must withhold that from their paycheck. Then we also have to withhold their Social Security and Medicare, which is going to be $42.55 plus an additional $9.95. So therefore, after withholding all of these taxes, right, then the last thing that we have to do is issue the employee a check. So in this case, right, we're going to be issuing L $622.62. Okay? Even though she's earned a total $686, we're only withholding X amount of money, right, for her federal taxes. Okay? Now, in the state of Nevada, right, we are not subject to any state taxes. Okay? So that is we are one of the states that does not calculate or take out state taxes from our from the employee's paycheck. Okay, nobody pays into the state, right? Because we are a tourist type of community, so all of our tax dollars come from the casinos and so on and so forth. Now, with that being said, right, it really depends on what state you do business in. Okay, so if you're doing business, if you do business in California and you have to pay your employees are subject to California state taxes. Okay, same thing with other countries, other states around the United States. We're just one of the 5 states that do not have state taxes. Okay. All right, any questions here? Okay.
No.
So now that we just figured out what the employees' taxes are, now we must take a look at what the employer is responsible for having employees. And it's going to start off with the very first one is that If the employee puts money into their FICA, the company is 100% responsible to match the employee's federal insurance contribution. So if the employee is responsible to pay into Social Security 6.2%, the employer must match them 100%. Okay, that is the responsibility of having employees. Is not only does the company have to pay in for the employee, we also have to pay for the employee to work in our company. Okay, and we have to match them 100%. So in this case, again, FICA, company FICA, is going to be consisting of Social Security and Medicare, and it's based on the individual. For just having L work at the company, right? We are subject to have to pay into a total of the $52.50, right? It's the combination of the $42.55, which is the Social Security, plus the $9.95 of the Medicare, right? That is the responsibility that the company must pay into, right? So in this case, whatever the employee puts in, company matches. Okay. Other things too is going to be employer taxes. So again, we are obligated to have to pay into the Federal Unemployment Tax Act, also known as FUTA. Okay, so by law, all companies must pay into FUTA. Okay, it's just because if you're gonna have employees, right, you must pay into the federal unemployment. Okay, so this could range anywhere from 0.5% all the way to 6%. Okay, now that depends on how big your company is, how often you collect the money, and how often you are scheduled to have to make these payments. So as you can see, a major corporation would be at the highest percentage, 6%. And because they have so many employees, they probably are more likely to have to pay more frequently and collect it much more quicker. Okay? Whereas a small company, right, that doesn't have that many employees, so they're probably going to be taxed at anywhere from 0.5 or even 1 point for the federal unemployment. And then, of course, because they have less employees, they're going to be slowly, collecting small amounts of money. And the government doesn't want to take that from you, right? Because what's the point of collecting $20 from a small company when I can collect $1 billion from a major corporation, right? So in this case, your pay frequency to the government's going to be less likely. Okay. So with that being said, right, that's just the criteria there. However, in this class, I'm going to keep it nice, sweet, and simple. You're going to know 6%. Okay. You don't need to know because in this case, we don't know how big our company is. We don't know what our circumstances unless we talk to our tax accountant and file for taxes for the first time to the federal. Okay, and this is where when we file those forms, this is where the form 941 stems out from. Okay. And then, of course, the next thing that we have here is going to be state unemployment tax, also known as SUTA. In the state of Nevada, it's also known as state unemployment insurance, SUI. But either way, whichever one you use, SUTA or SUI, it doesn't matter as long as you understand it's the state unemployment. Now, in this case, right, it is the company's responsibility to also pay for the state unemployment, okay? So if you've ever heard of anybody complain saying that I paid into the unemployment, so I should get my unemployment. No. You don't. It doesn't come from the paycheck. It comes from the company. So the company's responsible for paying into that unemployment, and they have the right to choose not to pay into unemployment. As, terrible as that sounds, the only thing that you're actually contributing is your time. That's it. You pay nothing to the unemployment. So therefore, the unemployment doesn't owe anybody anything. Okay. So just a little clarification there. Now, so that means for having employees, right, in the state of Nevada, if you are a brand new type of business, right, you're automatically going to be taxed at 3%. Okay, 3%. Now, again, it can range from anywhere from 2.5% to, I believe it's like 5.4%. And in this case, there is a cap to this. It's it's 33,400 in the amount of state taxes that you can collect up to. But then again, it just really depends on how big your company is and how many employees you have. Okay. So those are and in this case, because we're taking a look at state unemployment and we're going to act as if we are a new kind of company, we're going to automatically assume that SUTA is going to be 3%. So again, FUTA for federal, 6%, SUTA, state, 3%. Okay? Now, what is these percentages based off of? It's based off of your employee. Okay? If they earned X amount of dollars, you're going to take that percentage off of them because you are calculating how much unemployment you are subject to have to pay for having that person work at your company. So if they do get fired or they do get laid off, that means the money that you've already contributed will technically go to them. Okay? So in this case, once again, the individual does not pay into their unemployment, the company does. Okay. Last but not least, other types of payroll taxes that are subject to be either take out or deduct from a paycheck is going to be things like workers' compensation, right? A workers' compensation is going to be more or less a protective, a protection for legal issues that happen between the employee. Okay, so if the employee gets injured on the job, this amount of money right here is going to be the amount that covers the individual's medical needs. Okay, and this is a safety measure to prevent that employee to come back at us and say that the company did nothing and file a lawsuit. Okay, and so as a company that, depending on what the job entails, right, you do not want to pose any dangers. So in this case, right, other deduction are not deductions that come off the paycheck, but other responsibilities that the employer should pay into, it's going to be workers' compensation, because a lawsuit can take more money out than if you just did a preventative measure to be able to collect, to pay into an individual's workers' compensation in case one day they do get injured on the job. Okay? Other things could be holiday pay, vacation pay, sick pay, okay? In any insurance, whether it's health, vision, or dental, right? Those are things that are responsible that the employer is responsible to either provide. Now, this is not obligated, but if you do offer it, then you talk to your individual whether you either pay 100% or have the employee pay a partial of it. Other things could be other retirement benefit plans. So a great example is going to be a 401k plan. Other things could be profit sharings or fringe benefits. So if they pay into your company as like a membership or a you know, what do you call those? Um, when you have, anyways, when you have those like type of groups that support employees' rights and stuff, they have to pay a certain amount into that as well, and the company has to also provide that as well. So anything like that, or any meals and lodging. So if the company pays for a travel expense, right? They're going to reimburse those individuals for meals and for hotel expenses. That's all paid for. So those are going to be other contributing factors for having employees that you have to consider to either pay into taxes or etc. or pay as extra into certain aspects. Okay. So, last but not least, how do we journalize it? Straightforward, right? In this case, right, we're going to be taking a look at payroll tax expenses. And what the payroll tax expenses is going to be a sum of all the responsibilities that the company is responsible for paying into an individual's account. So in this case, right, we're responsible to pay for FICA, which we've already calculated, right? We must pay into their federal income tax. I'm sorry, federal insurance contribution, right? We must pay into theirs, okay? We have to pay the federal unemployment. We have to pay for state unemployment. And of course, to keep ourselves protected, we also pay into a small account called workers' compensation to protect ourselves for in case this employee gets injured on the job. So once again, these calculations are above, right? FUTA is going to be based on the individual person's earnings, okay? So in this case, if L earns $686.25, 6% of that is $41.18. 3% of that is $20.59. And 1.36%, which is workers' compensation. That's just a number that's just generated. It's not a number that will stay this way, right? Depending on what the company is. If it's construction, you can already guess that it's nowhere near 1.36%. It's probably going to be a lot higher than that. And that's going to be $2.33. So tally them all up, and that means for having L work at this company, we are responsible to have to pay in $123.60 per paycheck for having L work at the company. So not only are we responsible to pay $686.25, we have to pay an additional $123.60 for having L as an employee. Okay? All right. Any questions here? Okay. Now, imagine this. This is only for one employee. Imagine if you had 20 employees or 100 employees. How time-consuming is calculating payroll? Because every individual will have their own W-4 forms. Not everybody's going to be paid the same rate. Some will be paid on a wage. Some of them will be paid salary. Some will be paid on different wages and different salaries, right? Every individual will have different benefits, right? You're not going to be giving your part-time workers, any fringe benefits because they don't work for the company, but your full-time employees do get their fringe benefits. So each individual person that you're looking at, you have to not only calculate the employees' taxes, you also have to calculate the employer's taxes per individual, and each individual has a per different case scenario. So again, you can see why it's much easier to pay for somebody else to do the work for you, right? Pay an automated payroll system Go to the bank. They have a payroll accounting system that you can use over there too. Okay? And this is where a lot of the times, if the bigger the company is, the better that you should just pay a service fee to have it done for you instead of you manually calculating this. Okay. So last little concept here is going to be when federal tax are paid, depending on what kind of business you are. Usually, they're always paid in the very beginning of the year. Okay, it says on the form itself for the 940 and the 941s. Okay, and the 943s. Okay, so again, those are all federal taxes that you must pay into. Okay, and it also depends on how big your company is. So again, a corporation that has 1 billion employees, you're most likely going to have the government come after you a lot more frequently. So oftentimes corporations that have those typical types of employees that have a lot of them, they have to pay the week after payroll has been issued. Okay, because again, 1 billion employees means there's millions of dollars of tax dollars that can be collected almost instantly. So, but if you are a small business, you can get away with having to pay either annually, quarterly, or even monthly. Now, if you do a monthly responsibility, it just makes it much more easier on you, just because then you don't have to, wait too long to save up a bunch of money to go ahead and just pay off your liabilities. But you must pay them or else you will get fined. Okay? So whatever amount that you get scheduled for, you must pay or else. Okay? Now again, with that being said, it just depends on whether your tax accountant tells you when you file your forms for the first time. Again, they use an electronic payroll type of system to collect the money, so it's almost instant. So in this case, right, your best bet is to talk to your tax accountant to be able to figure these numbers out and when to schedule your payments. So again, chapter review, right? We talked about payroll, what the different types of employees are. We talked about a bunch of different forms that for this test, I will only test you on the more important ones, like a W-2, W-4, and that's it. I'm not going to ask you about the form for 940 or 941 or 1099. We're not, no. This is just talking about payroll. So the most important one is just the W-2 and the W-4. Okay. And we talked about what the employee is subject for taxes, which is the federal income tax withholding, okay, as well as FICA, which is the Social Security and Medicare, okay? And of course, we talked about what the employer is responsible for, which is FICA, FUTA, SUTA, and workers' compensation, okay? So in this case, FUTA, which is 6%, no cap there. And then SUTA, actually there is a cap for there's a cap for SUTA. For SUTA, once again, we're going to learn in this class is 3%, and the max cap that you could do is $33,400. And then, of course, for FICA, right, Social Security is 6.2%, which you can collect up to $142,800, where Medicare is only 1.45%, and there's no cap limit to that one. Okay. And, of course, if you are interested in employees and just learning about how to pay them, what different types of employees, what are the different methods, and what you can offer your employee, you should definitely check out the irs.gov publication 15, and it will give you like 100 pages worth of information on what to do, how to tax them, how to pay them, and etc. Okay. And of course, we talked about how to use the percentage method to calculate, right? there's the example here and what the journal is going to look like on the employer standpoint and the employee standpoint. So employee is at the top, employer is at the bottom. Okay. All right. In regards to payroll, get started. All right, so let's go ahead and do the exercises for this section here. So we got 2 examples. Again, I provide the tables for you, so you don't need to do anything except for practice how to calculate employee and employer taxes. So let's start with the first one here. We have Bob. Bob is a married man with 3 dependents, okay? And he files as head of household, okay? And he only has 1 primary job, okay? He earns $19.50 per hour, and he worked a total of 72 hours this pay period, right? And the payroll period is going to be bi-weekly, so that means he gets paid every 2 weeks, okay? Now, of course, we're going to take a look at how to use the tables here, okay? So down below, you're going to take a look at what those tables are. So let's go ahead and figure out the first one here, which is going to be calculating Bob's federal income tax withholdings. So what's the first step when we need to calculate the federal income tax withholdings? How much gross earnings did Bob make? So in this case, we're going to take 1950 multiplied by the 72 hours that he worked this pay period. So in this case, how much money did Bob earn? Like that? 404? Okay. All right. Step 2 is to add any deductions. So in this case, right, there's no extra income because he only has 1 job. And the assumption is he filed as head of household. So therefore, that's a different status. Okay. And so therefore, nothing there. And we're going to subtract any extra deductions, which in this case, he doesn't claim any. So in this case, the total amount that he is subject to be taxed at is going to be for the $1,404. Okay? So let's go ahead and take a look at our table and figure out which section he belongs to. Okay? So in this case, he's earned $1,404. That's definitely more than $1,269, okay? But less than $2,808. So in this case, he belongs to this bracket, right? This was head of household, and this is for bi-weekly, okay? So that's this table here. All right, I already provided the table for you. So therefore, this is the amount that we are looking at. Okay. Right. He's earned between $1,269 and he's made less than $2,808. So in this case, letter C, D, and E tells us this was information. So what's the first thing that we must do? Good. So 1,404 minus the 1,269. And what is that? $135. Okay? So then what's the next step that we have to do? Multiply by the 12% because that is the amount in excess that he's subject to have to pay additional to. So in this case, what is 12% of $135? $16.20. Okay? And then last but not least, what is the last step that we have to do?
Add
Add
the 54.
the 5460. So in this case, right, we're going to add the amount that the government's going to tax you regardless. So in this case, what is his grand total of the federal income tax? 70 dollars and 80 cents. Okay. Now, because there's an additional step that he has to take because he's claiming 3 dependents. Okay. So in this case, right, 3 dependents is going to cost me $2,000 per dependent. Okay. So $2,000 times each dependent is going to give me a grand total of $6,000. Now, in this case, my pay period is bi-weekly. So how many checks is Bob going to be receiving? He's going to be receiving a total of 26. So in this case, right, let's go ahead and calculate this. If he's going to be claiming all 3 dependents, which gives us a total of $6,000 per year, and we're saying that he only is receiving 26 paychecks, how much money per paycheck is going to be subject to be taken away? Or in this case, kept? 238.77. Okay. So in this case, right, if this amount is going to be deducted from the taxes, right? Okay. So in this case, right, the total amount is 70 and 80 cents, right? And we're going to be subtracting a total of $283.77. In this case, this gives us a negative amount. In this case, can someone calculate this one? What is this amount here? I think it's like negative 100.
$167.97.
Okay. If there's a negative 167.97, right? The federal income tax says that if it becomes negative, you just say he takes 0 out from his paycheck. So that means his federal income tax is going to be 0 because he's claiming his dependents. So that means he doesn't need to be taxed. Okay? All right. So then, question number 2 says, let's go ahead and calculate Bob's FICA. Okay, so again, we said Social Security. What's the percentage of Social Security? Six. 6.2%. So in this case, 6.2% times, right, his total gross earnings, which in this case was $1,404. So in this case, how much Social Security is Bob subject to have to pay? $87.05. Okay. What about Medicare? How much is Medicare? What percentage is Medicare? 1.45%. So, because it's based on total gross earnings, what is 1.45% of the 1404? $20.36. Okay. So now let's go ahead and properly journalize this for his paycheck. Okay. So in this case, what am I going to recognize first?
Salary.
Yes, right?
Expense.
Salaries and wages expense. And this is going to be in the amount of his total gross earnings of 1404. Okay? Let's list out all the federal taxes that Bob must pay into. So in this case, the first one we have here is FITW, which in this case, what did we calculate this as? Yes, we calculate this as 0. What's the next thing that we have to calculate? Yes, Social Security, or also known as OASDI, whichever one you want to do. Social Security. All right. How much was that we calculated? $87.05. And then last but not least, we also have to pay into Medicare. Okay, for $20.36. So in this case, what is his grand amount that he is going to get paid for? So in this case, this is where we must pay him. So we're going to be issuing a check. So how much is Bob going to get paid?
$1,296.50.
Okay. So in this case, he's going to walk away with $12.96.59. Okay. So that's the employee responsibility. So let's go ahead and calculate the employer's responsibility. So in this case, right, based on Bob's earnings, we must solve for the company FICA. So company FICA is going to be Social Security, which is 6.2%, plus Medicare, which is 1.45%, which gives us 7.65%. Okay? So then, if Bob earned a total of 1404, how much company FICA is the company subject to pay into?
$107.41.
Okay. This, because we've already calculated this amount, right? If we go back right above, right, we know that Social Security was $87.05 plus an additional Medicare of $20.36 to give us a total of $107.41. Okay. All right. How about FUTA? What percentage is FUTA based on Bob's earnings?
It was the
Not 12%.
Or
Is that the federal unemployment tax of 0.25 minus 6%?
That's not the number. That's the range that you can have. But yes, it's one of those numbers. What is the one that I'm going to say that this class is going to be using? We're going to be using 6%. Okay? So in this case,
Okay. Okay.
what is 6% of 1404?
84.
What was that?
24.
84.24? Okay.
Yeah.
What about SUTA? What is going to be the state federal unemployment? That's the
Is that
3%,
then, right?
correct. So in this case, what is 3% of 404? 1404.
Uh,
40, oh yeah,
4212.
4212. You're right. 4212. Okay. Last but not least, what about calculating workers' compensation based off of Bob's earnings? So what percent is workers' compensation?
136.
1.36%. So what is 1.36% of 1404?
$19.10.
All right. So now let's go ahead and journalize all the taxes that the company must pay for having Bob as an employee. All right, so what's the first thing I'm going to recognize?
Payroll
Yes,
tax
right?
expense.
Payroll tax expense. Okay? What else am I going to recognize?
FICA, FUTA, SUTA,
Good,
payroll.
right? Mm-hmm.
And then
So company FICA payable. I'm not going to put payable. FUTA, right? We got FUTA. We got SUTA. And we have workers' comp. Okay. So in this case, how much was my grand total FICA? Okay.
107.41.
How much was FUTA?
84.
How much was SUTA? And how much was workers'
4212.
compensation? Okay.
19 and
So in this case, what is the grand total amount of payroll taxes the company is responsible to pay?
$252.87.
$252.87. Okay. All right. All right. Example number 2. Go ahead. Let's do this one. Okay. Susan is a single woman with 0 withholdings and has 1 primary job. Okay. And she earns $25 an hour and she worked a total of 38 hours this week. Okay. The payroll period is weekly. So she's got 0 withholdings, 0 children, 0 extra income, 0 deductions. So in this case, right, and she filed as a single woman. So let's go ahead and figure out what her total earnings is. So in this case, how do we figure that number out?
Multiply the 25.
Okay, and we get 950. Okay. Again, you're going to add 0 because no extra income, and you're gonna subtract 0 because no extra deduction. So therefore, total amount that she's gonna be taxable at is $950. Okay, so let's go ahead and figure out what row she belongs into. Okay, right? She earns, right? She earns a total of $950, which is definitely more than $433, but it's definitely less than $1021. So in this case, how am I going to calculate this? What's the first thing I got to do?
You gotta subtract the 950 with the 433, which is 517.
Okay, what's after that?
And then you multiply it with 12%, which is 6204.
Okay, then what's after that?
And then add it with the 1920.
Right?
Which is 8124.
That's how much federal income tax she's going to be contributing to her income tax. Okay? Because she has no children, so there's nothing to take away from that, and no extra deductions. She's subject to have to pay into $81.24. Okay? So let's go ahead and figure out the rest. What is the Social Security that she's going to be subject to pay into? So in this case, she earned $950, right? What's the Social Security percentage? Okay, which gives a total of
5890.
$58.90. Okay. What about the Medicare?
You multiply it with the 1%, 145, which is which is 1370.
Okay, 1378. So let's go ahead and calculate our grand totals here. So again, salaries and wages expense for a grand total of $950. Okay. She is subject to have to pay into federal income tax withholdings for the amount of $81.24. Okay. She has to pay into her Social Security of $58.90. And last but not least, she has to pay into for Medicare for a total of $13.78. So, in grand total, how much is she going to get paid?
$796.08.
Mm. Already almost $200 out of the paycheck. Okay. So then let's go ahead and solve for the company's responsibility. What is her total FICA? Okay. What is the amount of FUTA she is subject to? Employer is subject to pay. She made a total of $950 times 6%. Even?
57.
Okay. And of course, how much state unemployment? $28.50. Okay. And how much workers' compensation?
$12.92.
So then, let's go ahead and calculate the total amount of payroll tax expense that the company is subject to pay. So again, we are subject to pay FICA, FUTA, SUTA, and workers' comp. Okay, so let's start with FICA. How much was the total FICA?
57.
That's FUTA.
Oh, 72.
7268. You said 57, and then 2850. And how much is the workers' comp? Okay. So in grand total, how much taxes is the company responsible?
171.
Perfect. 171.10. Okay. There you go. And that is it for today. All right. Any questions in regards to payroll?
No.
I
Go
have
for it.
one question. So when it says household, what does like I don't get it. When it's household, single, and married. So what's the difference? But is it so when you're married, but one of the spouses are not working, and so you put it
No, no,
as
no,
head
no,
of
no,
household?
no, 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 no. In this
Am I
case,
right?
so you have three different statuses, right? One is whether you file as single or you filed as married, but filing your taxes separately. As in, you're doing your taxes as an individual person. Okay, that's one status. The second status is if you are married, filing jointly. So you get a tax break if you are married because you're claiming two incomes from you and your spouse, and any other extra income that you and or your spouse earns. Head of household means that you are responsible to take care of a whole entire family, and you can claim that status if you have dependents under you, and you are responsible to pay for everything, as in you're the primary income for a house, like for a family. Okay. And with that right there, you get a huge deduction because if you're the sole income and you're supporting your spouse that does not work, then yes, being the head of a household, you get extra deductions on top of that. So there's 3 different statuses that you can claim. All right.